China's manufacturing sector continues to expand in 2013, according to a closely watched indicator, another recent sign that the world's second largest economy is picking up steam. Joining me down the line to discuss is Maritza Cabezas, Senior Economist covering Asia with ABN AMRO. So Maritza, data from HSBC showed China's manufacturers are seeing a pickup in both new orders and employment. Signs are maybe growing optimism for the sector in 2013. Was the report in line with your expectations?
Well, yes, actually, we've recently released our China forecast for 2013, and there we see that the Chinese economy would pick up moderately in 2013, and I think this fits in line with our, let's say, slightly more optimistic outlook for China in the beginning of the year. What we are seeing is that domestic demand is improving, and this is consistent with our argument that in a first part of 2013 it will be mainly domestic demand that triggers the economy, and later on, as the global economy begins to recover, then that will also benefit China through the external side.
China's economy may not be the juggernaut it once was, but the country averaged growth around 10% for nearly 3 decades on the back of its manufacturing sector. Do you believe that the fears for a hard landing may have firmly dissipated?
Yeah, for China, we were accustomed to seeing the 2-digit growth, but right now China is going through a rebalancing strategy, and what that implies is that they will be more focused on consumption-led growth and instead of investment-led growth. And obviously, that means that manufacturing won't be expected to grow at the rates that it did in the past. But in its place, there would be more stimulus for consumption. Although this is a long-term project, we are already seeing that in 2012, despite the slowdown, retail sales, which is a good proxy for consumption, that it moved quite steadily throughout the year. So there is some good underlying data already in 2012, and we expect that this to continue in 2013. So the star in growth will not any longer be manufacturing, but if the strategy presented by the new leaders in its 5-year plan in 2011 goes forward, then it would be basically that we would be seeing a stronger consumption in the coming years.
Today's report was in contrast to data last week, which suggested China is losing its competitive edge as a low-cost manufacturing base, with makers of everything from handbags to basic electronic components relocating to cheaper locales like Southeast Asia. One analyst refuted this suggestion by saying, "We have noticed some migration by companies, but this is a normal migration. It's not accurate to say that there's been a large-scale shift of manufacturing." But what is your opinion on this?
Obviously, an increase in wages in a country like China does reduce competitiveness, and some of its neighbors are taking advantage of this increase in wages. But the question is, what will China do about its productivity? And there is a lot of space. And I think part of it, all the infrastructure projects that China has implemented and continues to do so, are a very important factor to improve productivity. And so I think that balancing the increase in wages with an increase in productivity is the way forward for China, and I think that authorities in China have this very good in their screen.
How heavily is the Japan-China dispute likely to weigh on market sentiment throughout the course of the year? And what other economical or political challenges would you pick out as being particularly difficult for China to negotiate?
China actually has had numerous territorial disputes with its neighbors. A large number have been settled through compromised agreements. So I think that markets don't react, let's say, that much when we see some disputes between Japan and China. But what we do see is that the stakes are so high that we think that the efforts to avoid these disputes is only becoming higher for these two countries, and that we saw already in 2012 with the cost that it had not only on the auto industry but in tourism and in foreign investment. So I think for the markets, I think that there is some sentiment that there is acknowledgement by Japanese and Chinese authorities that it's better to seek a compromise than to engage in further dispute, and I think that's why Japan has been sending envoys to China to try to settle matters in a diplomatic way. And with regard to the challenges, economic and political challenges, I think they are numerous. As the population begins to get more need to consume, the difference in income between high and low income earners, it will become more an issue for Chinese authorities, and with it everything that it needs to be let's say fixed, including improvement in environment, pollution remains a large concern. So there are numerous pending issues that they will have to settle gradually.
With all that we have discussed, what is your outlook for the Chinese yuan moving forwards?
What we are seeing is that we expect a slight appreciation of the yen this year, practically double the pace seen in 2012. And that's in line with the recovery of the economy, but we are also seeing that there could be some factors that mitigate the impact of the recovery on the foreign exchange, and that has to do that we have been seeing some capital flowing out of the country, and that's basically in line with what authorities allow under the control scheme of foreign outflow of capital. But in general, it would reflect a modest appreciation this year.
Maritza, thank you for your time and analysis. Well, tomorrow marks the end of the trading week, but the TV team has plenty more to bring you, so please do keep clicking back. Bye for now.